Good morning and welcome to the ADS Securities Markets Update. Another day with lack of fundamentals across the board, which may lead to another thin trading range ahead of the European and the US session today. Beginning with the Asian session this morning or today, the RBA monetary policy meeting minutes showed a more dovish tone, repeating that more AUD or Aussie weakness is likely and necessary for a balanced growth. And the RBA also noted that inflation pressure is well contained and likely to remain ahead. The bank also is not looking for strong growth in Q2 or the second quarter of this year, saying that the strength in Q1 GDP is unlikely to continue in Q2. But they are also supporting the Chinese easing again, saying that it gives them an additional support to their property market. As a result, the Aussie declined across the board this morning, or declining the most against the New Zealand dollar by 0.7%, and also against the US dollar declining by more than 0.4%, reaching as low as 0.7345. And in the meantime, the oscillators so far remains well negative, but at the same time, the pair is heavily oversold, which may lead to a short-term retracement to the upside in the coming days. But the next support for the time being stands at 73.20, 73.10, which could be seen today. As for the European session ahead, there are only two economic releases in Switzerland, from Switzerland and the UK, which may have also a slight impact on the markets. Beginning with Switzerland, the trade balance surplus is expected to narrow back or to decline back toward 2.54 billion in June after 3.14 billion in May. In the UK, the public sector net borrowing also is expected to decline back to 8.6 billion pounds in June, down from 9.4 billion pounds in May, which would be also the lowest in 2 months. As for the US session, no economic figures will be released today, while all eyes will be on Apple earnings for the second quarter of this year, and the estimates are higher, with EPS adjusted is expected to come in at $1.18 and the net income after tax is expected to be at around $10.45 billion. Looking at some technicals today, first of all, the euro basically continued to remain well supported by 108 or 1.08 in the past few days or since the beginning of the week, while a breakthrough that support may lead to another decline toward or almost toward this trend line support, which basically stands at 107.50s, which would be also watched very closely, as a breakthrough that support may continue or may test or another short-term decline toward, or may change the short-term outlook toward or to negative from positive, with a possibility to trade or to test 1.0520. In addition to that, or going forward also to the British pound, it remains well strong or well supported by many support area above 1.5550 since the beginning of the week. However, a short-term decline also could be seen toward 1.5503 or also 15462, which basically which represents its 50 and 61.8% from the recent rally since also the 8th of July. And basically, this decline may happen especially if today's public sector net borrowing increases or increased last month. However, the general outlook remains positive for the time being, as far as the pair continue to trade above 1.5330, while a break above 5680 is needed to clear the way for further gains ahead. Gold prices, and as we noted yesterday, collapsed yesterday or the beginning of the Asian session by $40, reaching as low as 1087, and this happened after the Chinese announced its gold reserve figures, which also basically it is the first update since 2009. And in the meantime, gold basically touched its 50% retracement on the longer term chart since 12 years, which basically at 1087.24. A breakthrough that support may clear the way for further decline well below $1,000 in the coming months toward 890, which represents its 61.8, which should be watched very closely. But the long-term outlook remains positive as far as gold continues to trade above 890. Finally, and after Janet Yellen's speech last week, the dollar index continued to trade or continued to rise further after a breakout of the 97.52 resistance area. Right now, it basically switched to a support area. We should watch 98.50, which is basically represents its short-term downtrend line on the daily chart, which basically started in March of this year. A break above that level would clear the way also for further gain, or may change the US dollar short-term outlook into more positive outlook. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow.